Okay. And we're live.
All right. It's good to be back.
It's good.
All right. Welcome to Bootleg Weekly, guys. I guess we'll do the introduction. Tevis since you're giving me the silent treatment. You just missed me, I guess, because I missed out on FinTech Friday. But this is Bootleg Weekly. As always, we have several different topics that we're looking at tonight, including S&P 500 inclusion. We'll talk about some SOFI there as well. We'll talk some NVIDIA. We'll talk about some of the competition that's emerging from the hyperscalers like Amazon and Google, and if that's a credible threat. Also related, maybe a short mention on Michael Burry and what he's doing as far as shorting. And I feel like that there was something else we're missing. That's right, crypto. The big Ethereum event is coming up here in a couple of days. We'll talk some BitMine as well, and maybe sneak in a little bit of Tevis's favorite stock strategy.
Yes, definitely my favorite stock strategy, right behind Joby.
Yes.
Yeah, it feels like longer than a week since we had this last show, but a lot has happened.
It does. Now, I know you're Canadian, but did you celebrate American Thanksgiving? Because you're practically American, so.
No, but in my defense, I didn't really celebrate Canadian Thanksgiving either. So,
all right. Well, that's fair. Yeah.
Yeah.
We see where your loyalty is. So,
how was Thanksgiving for you?
Haven't had a monster too many times recently, but enjoying this one today. So, also, if you're joining us as far as audience, we'll get to your questions. We'll have a Q&A period towards the end of this. As always, if you have questions along the way that relate to what we're discussing, we'll try to get those earlier. Otherwise, we'll try to hit those at the end. Where do you want to start, Tevis?
We can start wherever. Yeah, we can start wherever. I have the list up here. So whatever's easiest for us to start with, I think we can start there. We can start with some macro or whatever. Did you see this yen carry trade thing?
So I saw that. Are you referring to the 2-year Treasury yield for Japan?
Yeah,
you are. Okay. Yes, I was like, are we calling it that? Because I don't know that we're calling it that. That is reminiscent of is it August 7th last 2024. So.
But, I mean, it's kind of like that because you have to unwind the U.S. assets if you're now getting a better rate in Japan itself, and so there's a lot of like treasuries. I think they're the biggest holder in the world of U.S. treasuries.
Yes, that's correct.
So there's an issue there, right? Because if you remove this like free yen funding, this free trade essentially, then it could potentially spell some trouble with regards to deleveraging and liquidity issues and all these other things. I don't know how well informed you are about what's going on, but
about anything, nothing. I know nothing.
Well, I mean,
on this a little bit.
This unwind, yeah.
Go ahead and talk us through it. I'll throw in a couple of things too, and we'll talk about why that tends to have an impact negatively on equities.
Yeah. So my understanding is that traditionally, for the last however many years, decades, you've been able to essentially have zero interest borrowing in Japan, and what these banks have done is they've borrowed from Japan and they've bought U.S. treasuries with them to basically arbitrage a free yield. And now that's changing. You had a change in leadership in Japan, and that's not going to be the case any longer. Obviously, Japan's debt to GDP is like 300% or something ridiculous. And so if that's not the case anymore, and this like free money glitch is patched, then the fear is that all of that money is going to come out of U.S. Treasury, so a lot of selling of U.S. Treasuries, so that it can be returned back because it was borrowed in the first place. Now, that might be an oversimplification, but that's like the high level, my understanding of what's happening.
Yeah, and the only other, and you kind of you touched on it, but just so it's especially clear, another part of this is that if you're in Japan, the largest holder of U.S. Treasuries, these investors that are investing from Japan and buying U.S. Treasuries, they're looking for yield. They're not looking necessarily for investing heavily in equities, but there is some of that as well. And what's been the situation in Japan since the 90s. Effectively, is if you want any kind of yield, you have to invest outside of Japan, and that's why they buy U.S. Treasury significantly. That's why they buy a lot of U.S. equities and also equities elsewhere as well. But that's when that balance shifts from like absolutely no yield and it's abysmal to still like very terrible. If we look at the 2-year yield, actually, let's pull that up. It looks scary if you like zoom in all the way to your yield.
The worst since 2008 or something like this.
Yeah, but I mean, it's not happened overnight, and I think that the market, at least this time. So when we had the actual yin carry event last year in August, I think it was August 7th. That Monday was just bloody and awful. And I remember you and I did an emergency stream because we were like, "Hey, this is scary for a lot of people. There's some new investors. We don't want anyone killing themselves for money. The market will eventually recover," and eventually was like 2 days later or something. So, but. Yeah, so this was a lot less scary of an event than back then, but you can see, let's zoom out a little bit more, and we can see how low this rate has been to nothing, literally nothing, which is crazy. Now it's at 1%. So it looks really scary, but it's still like relative. And by the way, the 90s were the terrible time for Japan economically. It's one of the reasons why they reacted this way with the very depressed rates on their treasuries. But
Japan's been a dead market for a long time. I mean, they peaked in the 80s and 90s, and they've just been completely dead from an investment point of view since that time. Like there's companies that I know we sort of joke sometimes that there's companies that are U.S. companies that haven't really reached the levels where they topped out at in 99. But like that's a lot of the companies in Japan is this because you just had this massive it was like macro ground tectonic plates shifting. So yeah, and I mean look, it sort of makes sense thematically as well. Like if you had 0% interest loan, then it would make sense for you to borrow as much money as you possibly could because you're paying 0% interest, and then put it into whatever is safest for you to gain some percentage points, right? So I also saw the overnight repo rate and Fed stopping quantitative tightening. There's definitely behind the scenes things that is going on right now that, I mean, it depends on how big of a deal you make out of it, but it could be concerning. It's worth calling out. I think QE is going to generally be positively seen by the market because more liquidity, more people are going to go risk on, but there's a period of time until that, like it's not a guarantee that it's going to start immediately, right? Because quantitative tightening just ended as well. And this like liquidity issues, I think is going to become a growing subject as a result of this geopolitics that's going on. Like somebody can make a policy change in Japan and all of a sudden the entire thing unwinds globally.
Yeah. It shows how, I mean, there's a lot of strength in globalism, but there is some risk just because you have more systemic type of events where there's a domino effect. But I mean, this obviously the way that the market reacted to this week, it wasn't a ridiculous drop. It wasn't a huge reaction like we saw with the yen carry, which, you know, at that time, like I don't get every dip right and when it's going to change, but I remember looking at this and we were looking at fear and greed index. We were looking at RSI. We were looking at a bunch of different, of course, the VIX as well, which spikes in these events. And I think other than COVID, that was the largest drop that we had since 2008. And I'm like, okay, is this the scariest thing that we've had since other than COVID since 2008? No. VIX barely moved, yesterday. Markets were pretty green today. There's several macro pieces also in 2026. New Federal Reserve chairperson. We'll have to see how many rate cuts we get in next year. That could shift around quite a bit, although we know what the probabilities are right now. And also the tax return, maybe stimulus stuff too, but tax return. Besant reminded folks today that there is a larger than usual tax return that's going to be happening for most Americans. Just because of the tax laws that they passed at the beginning of the year. They did not change withholding rates. And as a result, the average American is receiving a few $100s extra, which, you know, over multiple people, multiple families, that can add up. It's not a huge amount, but it is like a little bit of stimulus. I don't think it'll be inflationary, although if we do stimulus checks, yeah, it probably will be. So, where do you any thoughts on that? And where do you see us in the macro right now? Is this risk on or risk off, or just switches every other day?
I just think that behind the scenes, a lot of the signals that you're seeing are perceived bearish in terms of institutions positioning themselves more defensively. And yet, what is being telegraphed is perceived bullish, with Trump coming out saying interest rates should be at 1%, and then having Kevin Hassett, who's going to be one of the most dovish Fed chairs if he is to step into that role. And then they're saying, oh, we could potentially cut income taxes completely, and all the things that Besant is saying, as well. And so there's just a little bit of misalignment there between what these massive institutions are doing in terms of unwinding risk versus what the government is saying in terms of signaling that, hey, we're going to go into risk on, and it's going to be growth mode and quantitative easing, and it's all good.
Yeah, it could definitely move around quite a bit. And do you think related that we get a Santa Claus rally? That's from Christmas on through the end of the year.
I hope so.
Is Santa not real? Are you saying Santa's dead?
Hey man, I would love a Santa Claus rally. Me and my very heavy bags would love a Santa Claus rally. But what I will say is I'm positioning my portfolio, and I made a post about this saying that, like, hey, this is where my portfolio sits on December 1st, and this is what I want to do. And what that includes is it includes cutting a whole bunch of smaller positions and starting to build foundational cornerstone positions in Meta and in Amazon as like 10% each, essentially, or 15% each, so that I can consolidate into 5 or 6 names. But I know that 2 of those names are Meta, Amazon. The third name is SOFI. And so I feel a lot of relative safety there relative to the very high beta names that can just go up, down, or in circles any given day. And so that's how I'm positioning myself, is I want to, by the end of January, be in a much more defensive positioning. And like if Meta wants to go up 20% next year, or if Amazon wants to go up 10% next year, that's fine, because I also own Nebius, I also own SOFI, I'm also going to own a little bit of BMNR. And it's like I don't need to go balls to the wall all out, because that's how I get like massive drawdowns as well when this stuff happens from a macro perspective. And it's not like I'm taking advantage of it in November, but I had to dip into margin to take advantage of it in November. And so if we do bounce back, I want to say to myself, okay, great. Like the one side of the equation is growth. The other side of the equation is wealth preservation. And I want to be more balanced in that barbell strategy.
What are you selling out of? Or is there any, are you like just trimming positions and making them smaller, or are you selling out of some positions entirely?
I'm probably going to sell out of Dual. I'm going to sell out of Next, and not eat like in the immediate, I'm going to layer out of them and probably sell aggressive covered calls to sell out of them. I'm probably going to sell out of Lemonade and use all the gains that I'm like up 100 and something percent from Lemonade. I'm probably going to fold all of those gains to doubling my hood position. And I'm then going to, once I unwind some of my cash secured puts in January, I'm going to be using some free cash to go into Meta and Amazon. I also want to trim a little bit of my BMNR and my Nebius. So Nebius right now ran a little bit wild. It's at 17.5%. I want to bring that down to like 15 or 14. And then BMNR ran a little wild because, again, taking advantage of the dip, it's at 9% and it's going to go up as it continues to stabilize. So I want to cut that down to maybe 5 or 6%. SoFi is like 30% of the portfolio right now. I want to cut that down, but I also just can't bring myself to cut that down. So that's the plan right now. I definitely want to get rid of some like less like positions that I got into because of my calls getting or my puts getting assigned, and I got paid to get into them, and I'm going to get paid to get out of them, but I do want to get out of them.
One thing you could do instead with Lemonade, if you've not already done it, is maybe just do cut your position in half because you're up over 100%. Let the rest run. And if you want something more stable, you could do something like AT&T. I know a lot of people have written it off. It's a dividend stock. You know, it's going to be stable and be around. And then you can call that like mini portfolio in Arnold Palmer because you're half tea and half lemonade. So
that's funny. I
so I had to do it. I was like, is he thinking I'm going to be serious about AT&T? No.
It's the biggest dad joke I've ever heard. The problem with Lemonade and Hood is that they're so small that they won't make a dent, man. Because if Hood doubles from here, it literally won't make a dent for me. It's a 1%, 2% position. If 2 goes to 4, I'm not going to be on the beach sipping Mai Tais, like I'm going to have to increase that position sizing so that it actually makes an impact. And so that's the whole concept of folding one into the other, is that I'm bullish on both. I think Hood is going to be the less risky. I got to be careful here because I'm going to get flamed online, but it's going to be the less risky, but and less high potential. I think Lemonade can definitely explode way higher than Hood can in the next 1, 2, 5 years, you call it, because they're not profitable yet, and they're expected to be fully profitable very shortly, and they have an amazing total addressable market opportunity ahead of them. But I also think Hood is right now having a lot of resources at their disposal. They have the predictions markets and tokenization total addressable market, and they are profitable and growing very steadily. So I think if I had to pick one from a defensive stance, I would probably pick Hood. If I had to pick one from an aggressive stance, I would probably pick Lemonade. But right now, my head is like in the defensive arena, so I'm probably going to go with Hood.
Yeah. Wait, maybe I had that backwards. You're going with Hood as far as cutting, or you're going with Hood as far as keeping?
I'll probably be cutting all of my Lemonade and then folding all of those gains into Hood.
Okay, yeah, that's the way I took that, and I was like, maybe I had that backwards. So, yeah, I mean, I don't understand Lemonade like too well. It's pretty clear that Robinhood's going to be very volatile. I think it'll probably give you a opportunity to increase its size too along the way, just because it is cyclical, very hyper cyclical too. If we go into crypto winter, which we will at some point, a great opportunity to add. But if I didn't have anywhere near the position for Robinhood that I had, I wouldn't be afraid to add here. So I like it.
Yeah, and I think I would sleep way easier. Not that I have trouble sleeping right now, like with my position where it is. I'm pretty sort of accustomed to wild swings in the portfolio. Like, for example, yesterday, everything in the portfolio was red except Nebius was up 7%. I was like, that's a good day because I have a ton of Nebius. And then today, everything is red and BMNR was up like 10%. I'm like, that's a good day because like I just need 1 or 2 to actually make a dent in the portfolio. And so I'm like, okay, well, if I only need 1 or 2 to make a dent in the portfolio, then why am I holding like 12? I could just be holding 5.
Yeah.
So I think between Amazon, that has a lot of interesting catalysts ahead, and then Meta, which is undervalued in my opinion.
Yeah, it is.
Then, yes. And then between SOFI and then Nebius, BMNR, and Hood, like I think that's a good portfolio to be having.
So as far as portfolio making changes as well, I don't, I didn't hear this in what you're doing there, and you have a lot more winners than anything that's pulled back. We're in tax loss harvest season, and on the other side of that, which could be why some of the names that have been weak are like especially weak and have been over the last few weeks. That'll revert, of course, in January when you no longer have the opportunity, and some that exited will want to come back. On the other side, in my chat, it was Narrative Ma'am 978 posted a few times about this, not spamming or anything, but just putting a good thought out there. Sometimes it's the reverse when you have some major winners where you want to rebalance your portfolio a bit. Your winners have won a little bit too much and you're overweight in something that you want to take some gains on. one of the things that people often do is wait until the next quarter, or since we're there, the next year as well for tax ramifications. Do you think that there is, and actually last year we saw in January a lot of weakness in some of those names that ran very hard in 2023. So do you think we're going to see a similar phenomenon? And if so, are you going to make any changes based on that?
So I did take gains throughout the year, and I have a lot of realized gains with regards to premiums. I have an entire portfolio that is a taxable portfolio that I've been running the wheel on. It's the tax rate is actually much lower because of how it's structured, but like Duolingo, for example, and Next, I can easily, and that's the plan. Like I want to get rid of them in December for tax loss harvesting reasons. But something that, if I were to get rid of SOFI, for example, I'd probably get rid of it in January because I wouldn't want to have it count in this tax year. So, I mean, like I cut my Tesla significantly at massive gains. I cut HIMS at massive gains. And then I've been running the wheel. So I have room, I have buffer from a tax loss harvesting perspective to get rid of some losers that I have in the portfolio in December. I also rolled a lot of stuff. So basically, when we had this drawdown, what happened was my cash secured puts were underwater. So the strike price was higher than the price it was selling at, the stock was selling at. And I rolled them out until January, and I rolled a lot out until February, actually. And because they were so far down, I had to pay a big amount for rolling them. And I got paid a big amount as well when I rolled them out. And that way, I just bought myself a little bit more time to have some liquidity available in my portfolio. So a lot of my cash is tied up right now because normally it would be a very easy equation for me to just allocate some cash and it's all well and good. But the cash is tied up right now until January, February. So I'm going to have more cash at that point to be able to just straight allocate. But right now I'm like, okay, what do I want to cut?
Yeah, the only I did this week and a half, 2 weeks ago. Thankfully, PayPal was a little bit higher, but I did a little bit of tax loss harvesting there with some leaps that have just gotten absolutely obliterated. Most of my account has been doing very well this year, but PayPal has been doing poorly and leaps even worse. So, let me take the opportunity. I put a reminder in the calendar. I may go ahead and turn around and rebuy, rolling out a little bit further when they're on the other side of this. If I had to choose right now, I'd probably just allocate it in something else. Not selling my PayPal shares, not selling my leaps that are in a tax advantage account. The disadvantage is I can't tax loss harvest, but just doing some tax loss harvesting because if I can legally avoid paying some taxes, I like to do so.
Yeah, exactly. So go ahead.
Oh, I was going to see if you wanted to talk some BMNR and see if it ever will go up again. Of course, the answer we believe is yes. But has anything? Are you ready to move on to BMNR, or was there something else you wanted to add on the? Okay.
Yeah.
All right. So, has anything really changed in your mind, or anything like popped up that you thought was particularly interesting? I know we talked earnings last week on Bitmine. Bitmine earnings were on Friday, were they not? No, it was Friday the last week. Yeah. Thanksgiving throws me off. So we talked about that. It was kind of an interesting update this week. We saw some crazy moves late last week as well, at over 20% up day. Anything shift in your mind or a read on Ethereum or Bitmine that surprised you?
Well, I mean, it was interesting because Ethereum was at 2,800 and then it popped back up to 3,000. And there was that Tom Lee interview where he said, he was asked on the Ethereum price, and he said, I wouldn't be surprised if it falls back to 2,800. And actually, 2,500 is like the optimal price because we want to be accumulating it even cheaper. And they are accumulating every single week. The new report that came out yesterday had them even higher cash balance, 880 million, and they had even more Ethereum. They purchased, I think, 97,000 or something. I could be wrong with the number, but I think 90-something thousand Ethereum last week.
Yeah. They have right there, 96.
Yeah, 96,000. So cheaper Ethereum is good. And then you had this entire liquidation event, let's say,
Yeah.
with a lot of leverage in crypto, and Ethereum fell right back down to 2,800, and Bitcoin fell right back down last night or Sunday at midnight again. So I think BMNR right now, the thesis is intact. I think it's a position that is set up for success. The whole name of the game is how fast can we get to that 5%? And then when exactly is staking going to be in the first uh, calendar month of the year, in the second calendar month of the year? Of course, they have their investor day in Vegas in January. So probably we're going to get a definitive answer at that point in time. Right now, nothing like, yeah, BMNR sucks right now because it's down, but at the same time, like it's not a thesis breaker, right? I think they're on track. They're executing. They haven't sold their Ethereum. They haven't wobbled at all. They're still buying every single week. So, yeah.
Yeah, I think the biggest thing that was a surprise for me over the last two updates was the cash balance. That's higher. I don't know if that's the highest ever. It's the highest I remember them holding, and so it's interesting. Like Tom Lee, of course, like you said Ethereum can go as low as $2,500, and there we went. So like typically, you never. With some people that are in leadership, you don't really know like whether they're just painting a rosy picture or whether it's actually reality the way that they see it. And with Tom Lee, like what you see is what you get. Like when he's like, hey, there is going to be some short-term weakness and we're bullish long-term, you see buys accordingly. They bought the almost 100,000 Ethereum tokens. They've actually accelerated that rate of purchase. And yet they also have 882 million. Last week, of course, they had that major move when briefly last week they're trading under MNAV. For probably maybe the first time. And so I was like kind of curious how the stock would react to that, what they would do, what moves they'd make, especially if that continued. And I think we'll probably talk strategy in a second, which is trading under MNAV. But part of that strategy is like, hey, let's not run out of gas. Let's make sure we have plenty of money there so we can be tactical. If they're trading way undervalued, they could buy back stock. If they are trading instead, with a premium, they can continue to sell more stock, buy more Ethereum, and also use that to take advantage of that dip of $2,500 or $2,500 per Ethereum. And I'm sure that they did so. So we are looking, pretty good for that 5%. The Fusaka update is, of course, happening in 2 days. So that's an exciting time.
Tomorrow.
Oh, yeah, that's right. Man, Thanksgiving just throws me off. It just, what day is this even? So, yeah, right, that's right. It was Wednesday tomorrow. So, no expected issues with that. I think you and I both talked about that before and covered it well. But yeah, Ethereum just continues to grow. Every fundamental aspect as far as stablecoin adoption and everything is sound. The only kind of pushback that I've seen, which added some fuel to the downside, was China trying to ban crypto again for like the 50th time. And they actually, so unlike prior bans, so like it's kind of an inside joke if you guys that are watching aren't too familiar with Bitcoin, or at least you weren't around the last cycle. In the previous crypto bull market, prior to the 2022 bear market, the winter, I think China banned Bitcoin like 12 times.
They banned Bitcoin mining, and then they banned like Bitcoin, like the brokerages, and they would flip flop between different types of bans, but all affecting Bitcoin negatively.
Yeah, but they did everything but ban people from saying the word Bitcoin. I mean, like it just when initially they did that, China and crypto went together hand in hand. A lot of the mining operations were founded over there. A lot of the people investing were in China, and so it caused massive ripples. Now the market's like, okay, well, that's too bad for you guys. But what I thought was really interesting is that they singled out stablecoin in their announcement, that when they were talking about the risks relative to crypto, and that they're trying to prop up their own currency and make sure it's used. And with stablecoin, we've looked at this before. I'm actually going to pull it up because it's been a little while. Let me go up to DeFi Llama, and just as a quick reminder, we're going to do Ethereum here for stable coins. We won't do just Ethereum. Never mind. We'll do all. And then we're going to do backing type. Now you can see, okay, so total stablecoin is 306 billion. It's fallen just a little bit from the all-time high, but we'll get back up there relatively soon. Backing type, we don't want crypto or algorithmic. Those do exist. It's a relatively small amount compared to the rest of the stablecoin that we want only. I don't know why it's being so slow. Come on. Okay, we'll just do only USD while it's working. DeFi Llama is usually pretty fast. It's not a paid service, so I can't really complain much. Okay, so this is, we saw it was a little bit over $300 billion that were backed in total for stable coins. 280 billion of that is backed specifically in fiat United States dollar. So that's pretty much everything. If you look at all the other currencies combined, like euro is actually second. There's actually a Russian stablecoin, which is interesting. But yuan, it really doesn't exist here. So as if stablecoins gain a lot of adoption in terms of spending in China, that means that the United States currency, which backs most of the stablecoin transactions, is what's being used heavily, and that's not a great thing for China. So that's part of the shift, the push back against that, and part of the drawdown. I think even more so for BitMine than maybe I expected yesterday. So
there's a lot that's going on with MicroStrategy right now specifically. So one of the things was around this dividend. I don't know how much you heard about that, but basically, well, let's talk a little bit about the drawdown first before we talk about the dividend, because MicroStrategy has fallen about 40% in the past month. There's rumors around JP Morgan shorting it. And I don't know how much you saw about this, Roy, but this sparked some outrage with people boycotting JP Morgan because JP Morgan publicly, or Jamie Dimon publicly spoke against MicroStrategy in shorting it. And you haven't seen it?
I don't think I heard that part. So
yeah. So I think it leaked. And if people in the comments have more context, then definitely let me know. But yeah, JPM. Hold on, let me. Yeah, I'll find some posts about it because there was people that were talking about. I should have prepared this. There's people that were talking about it, that JP Morgan is essentially shorting MicroStrategy, and people were then withdrawing they were closing down their bank accounts in protest for this. JP Morgan issued a bearish research note on MicroStrategy, and then well, MicroStrategy is down. Sure, there's no evidence. I mean, okay. A lot of it is rumors that are circulating. There's tons of users that are supposedly closing down their accounts. This is what I've been seeing, guys, on X. And yeah, maybe I'll throw this up. This is a nice little graphic. So this is the price action of Bitcoin over the last couple of months. And you can see, I mean, you can forget this stuff over here, but you can see that there's some traditional financial institutional pressure on both JP Morgan and digital asset treasury companies in general. And so MicroStrategy started falling. I mean, also Bitcoin has been falling as well. So it sort of makes sense from that perspective. BMNR has been falling as well, and Ethereum. So there's going to be a lot of FUD circulating around that whenever something like that happens. And then there was this dividend thing. So MicroStrategy, they basically jumped recently. Did you see they actually jumped today on rumors that they were going to be admitted to the S&P?
No, that's funny.
Yeah.
There have been rumors for a while, and we should talk about S&P 500 inclusion. We will in a moment too.
So some news came out a couple of days ago that they'd established a USD reserve of 1.44 billion in order to pay out 750 million in annual dividends. So that's about almost 2 years of dividend payments, 23 months of dividend payments, where they just sort of raise some money to pay some dividends. And it's actually quite interesting, right? Because one of the reasons why we like BMNR is the staking aspect. And of course, Bitcoin doesn't have that staking aspect, that yield generation. And so MicroStrategy would have to essentially sell shares to build cash in their reserves. And instead of buying Bitcoin with that cash, they would issue a dividend with that cash. There is also, I think it was Michael Saylor that was quoted around this. They basically were saying they're open to lending out their Bitcoin. I don't know if you saw this, Roy. But I think that could be really interesting, because if MicroStrategy lends out their Bitcoin, they're one of the biggest holders in the world. You can see a lot more short selling of Bitcoin.
What's the demand on something like that with Bitcoin? Because I'm not sure. I like a legitimate question. Versus like Ethereum, there's a lot more utility, so there is considerable demand. I would expect Bitcoin demand would be less, but I don't know.
Well, I would imagine the only demand, or the primary demand, would be to short it, right? Because if you're going to short something, you need to have somebody willing to lend it to you in the first place.
Yeah.
So I would imagine that's the main thing. If like an institution wanted to hedge their bet and short Bitcoin, or do like a spread trade or something like this, then they would need to find someone with considerable amount of Bitcoin so that they can transact with only one party, and they would probably go to MicroStrategy. And MicroStrategy would be fine with it because they're a long-term holder, but they're also issuing a dividend now, and they want more stability from that perspective. Now, the leverage and the liquidation effect, I think, is going to be a risk. So obviously, I would be careful about how much they were to lend out. But at the end of the day, they're not going to be the only ones that are lending out their Bitcoin.
Yeah. It looks like, well, at least let me throw this up. Actually, there you go. I know for a little bit, MicroStrategy, or strategy rather, was trading under MNAV. It did, of course, historically in the bear market, and it will continue when there's a crypto winter. According to fully diluted MNAV, it looks like it's up slightly, and then we have it actually a little bit under. And actually like this measure better, the outstanding MNAV. So it looks like it's a little bit under too. So it's really been under pressure for a while. Do you think this happens to Bitmine?
If it does, I think it's going to happen temporarily. I think there's always going to be people that are going to be looking to arb something like this. And even with MicroStrategy, I mean, if MicroStrategy holds 55 billion in Bitcoin and they're trading at 48 billion market cap, I think it's going to be only a matter of time before that happens. I think it's a little bit different with MicroStrategy because, I think it's a little bit different with Bitmine because they have no leverage and they have no like major debts. Whereas I think MicroStrategy is a different risk profile there.
So in this, I'm assuming Blockworks is updated since we had the read on the share count from earnings, but yeah, it looks like BMNR is at 1.16 MNAV or somewhere close to that. BTBT is kind of a hybrid thing, so I ignored that a little bit. But yeah, we need to continue to see it above. I'm glad that they're taking full advantage of it. I think if it would be really helpful if they're able to hit that 5% Ethereum before any time that they have a sustained trading under MNAV valuation, because then they can take a lot of the staking revenue. They could take some of the cash. They could take some of the little bit of Bitcoin that they have, the orbs junk that they have, get rid of that and use that to buy back stock if need be. But yeah, I think a lot less risk with BMNR just long term, and Ethereum too. So
yeah, I mean, there's a lot of stuff that are very clear pros on Bitmine versus MicroStrategy. The liquidity crunch risk is not there with Bitmine. So they can hold until Ethereum goes to zero, essentially. Their team is incredibly small. They have no real debt. They have no liquidity issues to hold, and staking is a natural phenomenon. Whereas with MicroStrategy, you're seeing investors get diluted because they're selling shares to raise funds to pay back investors with those same proceeds. It's kind of silly when you think about it like that, because investors are the ones that are footing the bill for other investors that are getting the dividend. So I don't know, man. I think the benefit is that it's under MNAV, so it can go up. I just think the structure is much more compelling for Bitmine versus any type of Bitcoin digital asset treasury company, just because the underlying assets are very different in their mechanics.
Yeah, there's a lot that they can do and a lot less risk as well. But we'll see. It's one of the reasons why I want to give at least 2 years for this time play, just because of an event like this, which I thought would be, through crypto winter, but I don't think we're in winter yet, despite it feeling a little bit chilly out there.
Yeah. Yeah. So this is how much can BMNR make on staking? They said about 400 million in net income. Yeah, about 3 to 4% on their Ethereum. So assuming they stake the entire thing, I think would be 6 million Ethereum that they would stake. That would be anywhere between like 300 million ish.
Yeah, paid out. Slightly north. Here's what staking revenue has looked like. If we look at it from all time. This is years, not years. That's all 2025. Let's do all time. There we go. Well, it doesn't go that far back. So through 2023, you can see it's fallen quite a bit. There is thought that basically it stabilizes around 2.5, but we'll have to see what that actually looks like. It's not going to go to zero, even though it looks like on the chart, it's like, man, when does it go to actually zero? That's not the way the validator network works. But as far as staking, that's another interesting thing here. So supply staked right here, we're not at 30%, but they have once Bitmine actually stakes their supply, that's another 10% Ethereum staked just from what they have right now. They'll, I'm sure, lend it out to make some revenue. That you can do liquid staking. By the way, this is like the actual staking as being a validator. This isn't liquid staking. This isn't crypto lending. Some of the other digital asset treasuries also do a combination of these, and I think that probably what Bitmine will do is the same. We'll have to see.
Yeah, and I want to answer this question. I know we're going to do questions at the end, guys, but this is, I think, relevant. BlackRock is going to launch an Ethereum staking ETF soon, so why would you own BMNR over that? The premium can easily disappear and management can go in different directions or leave. Sure, but I would argue that BMNR can also get a better staking yield because they're starting their own validator network, and there's some vertical integration benefits there as opposed to going with an off-the-shelf offering. Roy, would you agree or disagree?
I would probably disagree, but I need to do more research on that. I'm not sure. So with being a validator, that staking yield I think is set. I don't believe that you have any option to change. It's within the system itself, within the coding of Ethereum. Liquid staking is a different matter, and of course, crypto lending too. I could be wrong, but yeah, I would need to look.
So my understanding was that if I am staking my own Ethereum and I'm going through a third party, there is a spread that third party as a middleman would essentially take.
Okay, yes.
And BMNR, okay, so BMNR, by doing it themselves, they're not giving up that little spread. And so they would make a little bit more than me or Roy staking it on the open market because they're their own validator network.
Yeah, and yeah, that's correct. It's kind of like being your own payment service provider instead of being somebody else. So there's an interchange, the wrong term for it, but small rate.
Sorry, go ahead.
Well, I was going to say, SBET and others do that too. It's not. I don't think it's that hard.
Yeah, and I think not to mention the fact that they can do the validator network as a service type of model. If others want to stake through BMNR's validator network, the Maven network, then they could do that. So, I mean, you could see a world theoretically where BlackRock stakes through BMNR's validator network. And in that case, it's like, well, they're providing the mechanism for others to stake. And so they would get a cut of those proceeds. And then there's also the ability to raise more capital by diluting more shares and always trade above the MNAV. So you would get somewhat of a premium there based on how bullish you are on the leadership. So yes, leadership can always disappear. They can go in different directions, but there's also benefits on the other side of that coin with regards to leadership. Whereas on the BlackRock side, it's just an ETF and it's really based on the inflows and outflows.
Yeah, on the ETF, like, unless you're in New York or someplace where you can't stake, I don't know why you wouldn't just buy Ethereum if you're going to buy an ETF. I guess, there's certain portfolios, so tax advantage, that can't own the coin directly. So yeah, there's a little bit of use there, but it's, in my mind, I'm like, I hold Ethereum and I hold Bitmine, and I bought, a decent amount of both. My buys were relatively small just because I've been trying to add to cash and I've been successful in that. But yeah, the ETF, it's fine. Like it's the same question as why own Ethereum over BMNR. BMNR is a leverage bet. The Ethereum or the ETF, is not. And there's a time and place for both. I like to have a little bit of both.
And by the way, this is absolutely true. It is speculation. We will hear definitively what their plans are going to be in January. So I don't want to mislead anyone to saying that this is news. I'm just speculating as to what they could potentially do with their validator network going forward. We don't have the actual playbook until January.
And can you throw up their next comment too? It's the most recent one. Because that's a good comment. So I won't get like too into the weeds, but let's go back into the chart because it's easier to see this right here. So it's not that Bitmine will always be non-dilutive and so forth. So if we look at BMNR, so this is MNAV based on outstanding shares. It's a guesstimate because BMNR doesn't update their share count except on the quarterlies. So once a quarter, SBET does on, I believe, a weekly basis, if not daily. I'm not sure what strategy does there, but regardless, this ratio right here, if you're trading above at a 1 or above, it basically means that if you combine all of your assets, which in this case for BMNR are 3 different crypto holdings, but mostly Ethereum, and you take the amount that if you sold it at market at the exact price at moment, then that's what your company is worth relative to the market cap. So if you're above a 1, that means that your market cap is actually higher than what your assets that you're holding implies. And so you're trading at a premium. So as a result, technically your shares are overvalued. Now, it's kind of a different type of investment just because you're like, oh, overvalued, that's bad, that's terrible. Well, no, it's great for companies like this. And so if hypothetically BMNR was not at a 1.16, but was trading, if we look back here at a, this is a 1.35. If they wouldn't get this because they're not this type of company, but like BT's 2.46, what they're basically doing is every share that they're selling it, it's worth essentially 2.4 times more Ethereum. And so just because there's that big spread between the share price and what they're actually worth. Now for MicroStrategy, let's go back here to Bitcoin. And then we're going to look at the outstanding. There we go. So this is MicroStrategy here, the outstanding MNAV. And if we look at where they are right now, they're under 1. What this means is that if they sell their Bitcoin that they're holding is worth more than the market cap of their entire company at market value right now. Now, typically that doesn't happen for the leaders in this space as far as the digital asset treasury, although these are fairly new types of businesses. Strategy, of course, was like the grandfather. But you only see this either just for a short bit of time or during crypto winters as well. And usually Strategy and others trade at quite a premium. So here it was trading at 1.4, 1.5 back in the summer, 1.48. Which was great, although they have very, very different type of strategy too, no pun intended there, just because they're not typically selling shares and buying Bitcoin. So this spread is a lot more important for Bitmine, not necessarily as important for Strategy, just because that's not their main business model to acquire more Bitcoin.
We got like a lot of questions here, and strategy also dilutes only above MNAV now that they have a dividend IPO. Now they have dividend IPOs to dilute, hence making MicroStrategy less dilutive. Now they have dividend IPOs to dilute, hence making MicroStrategy. MSTR has STRC, where they target around $100 and give a 10% dividend. Where's that 10% dividend being produced, though, if they are not selling their Bitcoin?
I think that's the preferred stock, the preferred equity he's talking about, but I'm not 100% sure.
My point is like, okay, let me tackle the question that this user had. Like, how is BMNR dilution okay, but MicroStrategy is bad? Okay, I'm against dilution in general. All right, both are not good. My point is like Ethereum has a utility layer, and because it has a utility layer, that being a validator in the network will always generate you a staking yield. So that money or that Ethereum is being put to work essentially in that validator network. MicroStrategy, they don't have that generating cash flow mechanism. And so they're going to have to always issue more shares whenever they want to distribute something, or they're going to sell Bitcoin. I don't know if there is another cash flow like arbitrage mechanism, if they can freaking sell covered call strategy on this or something to that effect, because like maybe there is, and I just don't know. But what I do know about Ethereum is that because there is a utility network, the more activity there is on that network, then the actual validator network, the staking, there's always going to be a yield there. There's always going to be a return. 3% is not a lot, and it's going to be less as more people start staking. It's going to be maybe 2%. 2% is not a lot, but that's going to be sort of in perpetuity for as long as this network is used. If BMNR accumulates up to 5% of their of the Ethereum supply, and then they stake it, and Ethereum is around for the next 20 years, they're going to collect the reward from those staking benefits. And then they never buy a single Ethereum token after that point. All they do is they buy back their own shares, or they distribute it to as a dividend. Then all of a sudden, that cash flow continues to go. So I don't know what the cash flow mechanism is for MicroStrategy.
Yeah, it's the preferred that he was talking about. So
okay, how does that generate cash flow?
It's, I think, well, so if you remember when SOFI did some dilution a while ago, the part of it was preferred equity, that they paid those off. This was a long time ago, I think around the IPO, or maybe slightly before or after, separate than the warrants. But in essence, in addition to owning rights as a shareholder and having the shareholder rights, there's a yield on that as well. So it functions similar to a corporate bond. Deeper than that, I can't go because it's
How do they pay them out? How do they pay them out? I understand it's issue them.
I don't know if it's a quarterly basis or if it's a monthly basis, but it's a regular,
not the frequency
amount, like a dividend.
Where do they get the money, dude?
Oh, it's basically regular generation from MicroStrategy. Yeah, I don't know.
That's what I'm saying. Like, how do they generate the money?
Debt,
and so, like, you could argue that, like, oh, well, they're always going to trade at a premium, so they can generate money that way. But it's like on the BMNR side, even if they trade under their NAV for the next 10 years, they can still generate 3% staking from being a validator in the network.
It's kind of the beauty too of having like 3 employees, so it's not too capital intense. I don't think taking too much of Tom Lee's time.
Preferred did 4 IPOs giving X% dividends. It is by diluting, of course. Yeah. So that's what I'm saying. It's like they're always going to be dilutive, and there's no exit route on that dilution. So I think how else do corporate bonds get paid? Banks dilute bonds and give X% interest, right? Yeah. So what I'm saying is, if BMNR wanted to, this is my understanding, and I'm not an expert on this by any stretch of the imagination. My understanding is BMNR is dilutive today by choice to continue accumulating. But because they're accumulating a productive asset that has a utility layer to it, if they wanted to never be dilutive again in the future, they can stop accumulating right now, never dilute a single share in the future, and just live off that 3% in perpetuity. And if they wanted to, they can start to buy back 3% of their shares every single year, right? And they could reduce that dilution through share buybacks. They can issue dividends. They can buy more Ethereum. That's the goal, of course. But my point is like it's dilution with an end goal in mind. Whereas for MicroStrategy, I guess the thing that's not clicking in my brain is the cash flow mechanism. And so to me, MicroStrategy is something that's dilutive for the purpose of buying Bitcoin. And the only benefit there is capital appreciation of that Bitcoin. You buy it at 100, it goes to a million, you bank 900K. But if they're never going to sell that Bitcoin, then what do shareholders get that's accretive versus buying the underlying? Whereas for this, you always have that, like that premium is worth something because of that validator network. Now, that might be an oversimplification, and that might be a very bad take. Like I said, I'm not an expert in this. I'm just trying to understand, but this is just my understanding.
Yeah, that's that's why I favor BitMine over, and I never got into strategy. I think strategy is going to be fine. And the way that Michael Saylor sees this is that fiat US dollar is absolute trash. And if that's your real and genuine view of the United States dollar and other fiat currencies, you're like, okay, wait, you're telling me that people are accepting absolute garbage for something that I find incredibly valuable, and you will gladly take all of your garbage as you perceive it and buy all that treasure that you want to have. And then you'll, at a certain point, which they hit, a long time ago, like, you know what? Why don't we borrow garbage from other people that, yes, we'll have to pay the yield on, and so we'll have to continue to borrow, but we're going to use that to buy more of the absolute treasure as well. So, he's a person that is, a Bitcoin maximalist, which is I'm certainly not, but Bitcoin is the only thing I'm doing a DCA in. So I think there's merit somewhat to the argument, and there is some weakness in fiat as well. But yeah, I am always cautious. Maybe I'm just a cautious person when it comes to debt. Like if you're using debt to buy something that actually accelerates your fundamental business, your revenue, your growth levers, and everything, great. That's okay. But oftentimes companies will do it for gimmicks, like Fiserv did for massive buybacks that were unsustainable, or they'll do it, to prop up a dividend temporarily that they really can't afford, or just to make it look like they're doing things. And I never really love that. Here's a case where I also don't particularly love strategy, even though I don't think that there's nearly as much risk as a lot of bears think. I don't think there's very much risk at all. You'd have to have Bitcoin go to a very small number, which I don't think even the most bearish people are expecting for it to really come under pressure as far as liquidation. But that would be a bad day if it ever got there.
Bro, if you're issuing shares to raise money to pay a dividend, you are literally robbing Peter to pay Paul.
Yes.
Right? Yeah, you're diluting yourself to distribute back to shareholders. It's completely circular. I just don't understand the reasoning there. If you're diluting yourself in a soft currency to buy more of a hard currency, which is Bitcoin, and continue stacking sats, I get that. But if you're diluting yourself to pay out a dividend to your own shareholders, why would those shareholders still be your shareholders? I don't understand it.
Yeah. I don't know. I just prefer to buy and hold Bitcoin. It's easy. That's it. So now there is a place where if we go into crypto winter, relatively soon, or when it hits, likely next year, I think MicroStrategy, even though it's trading undervalued right now relative to its NAV, I think that there's a lot further to fall. It got to, I believe it was maybe 0.74, 0.72, something like that during the prior crypto winter. So, look for it there. If things fall, it's going to fall at a far faster rate than Bitcoin. I'll probably be more interested in just adding to some Robinhood, buying some Coinbase, but strategy is one of those where maybe I'll buy some of that just as a leap, a couple of options not in a big position, but something speculative for a turnaround.
Sure. Next topic.
S&P 500 and SOFI.
All right. So people have been asking about this one. We can talk about the S&P 500 and SOFI. And I think that's a good segue because MicroStrategy is in fact the other stock that SOFI is competing with for a potential December inclusion. And MicroStrategy was up today about 6%, I believe, on rumors that they were accepted into the S&P 500 index, which were proven to be false. Those rumors were untrue. And I think, look, man, I think the S&P 500 committee is going to have a problem admitting MicroStrategy just because of the space that they play in. I just think that, yes, they meet all of their requirements, but the type of business that they are, I don't think the S&P committee is gonna admit them anytime soon. I could eat these words in like 3 days, man, if they do in fact get admitted, but I just don't see it. Like I see SOFI as a much safer bet to be admitted into the S&P because the S&P loves financials. I mean, Interactive Brokers got in recently, Robinhood got in recently, and SOFI is a business that has a real, business, a real product that they're selling, and MicroStrategy is a digital asset treasury company. Like I just don't see, even if all else is equal from a criteria perspective, I don't see the S&P 500 committee admitting MicroStrategy over SOFI. I just don't see it.
Okay, so I agree on that part as far as MicroStrategy versus SOFI. If those are the only two there, the problem for MicroStrategy, eventually BMNR as well will run into this. Although there is some yield there, so maybe it's a little bit different in their mind, is that EPS. So will they consistently post a positive EPS? Well, no, it's basically accounting. It's a change in value of the underlying for Bitcoin. There's a little bit more to it for strategy, but not much. And so that's not a consistent mechanism to produce positive EPS results. So I'm not sure, even though they're a lot more open to crypto because they inducted Coinbase, they inducted Block, Robinhood as well. I would be surprised if strategy sneaks in. I'm going to do a video probably late tomorrow on S&P 500 inclusion. But Tevis, so for SOFI specifically, I'll ask you 2 questions. One is, what percentage would you say do they get in from now through the end of next year? So we have.
Okay, let me answer that. But first, let me just tackle this question super quick, 10 seconds. So MV asked, if MicroStrategy ends up becoming a Bitcoin bank, can it enter S&P 500? I've been bagging a lot on MicroStrategy on this episode. And the reason why is because I'm harping on the fact that they're not producing anything on a consistent basis. There's no real product there. If, in fact, they can become a Bitcoin bank, they can do some lending, they can do some cash flow generation of some sorts, they can have some real profits to leverage their Bitcoin, then I think absolutely this is a real business that has a future beyond the liquidity and beyond the dilution and beyond just stacking Bitcoin as a thesis. Like there has to be some productive component of that to be classified as a business. And in the case of BMNR, the productive component is staking, and it's sure not going to be a lucrative business. It's only 3%, but I want to see something from MicroStrategy. And maybe they have it, maybe it's in the works and I just don't know about it. But that's my main thing. It's like, if all you do is buy Bitcoin and hold and dilute, then I have an issue with that because there's only so far that can go, and it can, and as an investor holding that stock, you won't necessarily have as much utility. But if in fact you do buy Bitcoin and you do something productive with it, or you have a business model that has Bitcoin as the thesis, absolutely, I'm all on board, and I think that they should be admitted in the S&P 500. So that's my whole thing about MicroStrategy. Don't get me wrong, guys. I just want them to have a productive business, and the software business, I get it. It's a legacy. It's a legacy component of their thesis, and it doesn't move the needle for them. Okay, now you asked about SOFI, and you asked about the probabilities of S&P 500 inclusion.
Yeah. Give me 2, I guess. So probability of now happening like now this week, the announcement versus the announcement rather than inclusion. So it allows for 5 of these announcement events. I guess there would be 5 either way of it being included. So now versus by the end of next year, what are your percentages?
Okay, so I would say about 20% now in December. I would say that moves up to about 50 to 55% in March. I would say 70% in June, and I would say 90% in September.
Okay. That's really specific. So in the next December,
100%? 96%, yeah.
Yeah, you don't really want to go full 100. So for me, I'm a little bit lighter. I didn't break it all the way out as far as quarters, but yeah, it's increasing, like you said. And I wouldn't go all the way up to 100% by the end of next year, just because the S&P 500, like, they can do strange things, oftentimes putting deserving candidates, and SoFi is deserving. There's no doubt. And making them wait a long, long, long time. And we've seen that time and time again, even with amazing companies. So I would say that there's an 11% chance that they get in this, as far as an announcement this week. And that is semi-serious. So I'll have a post kind of breaking down and looking at some of the candidates out there. But this is 2 of these companies. Was it just one? Yeah, one of these companies I'm not familiar with at all. It was just a list that I saw on Barron's that I thought was interesting and included it. But there are, I think, 5 really strong candidates. And then the ALNY, I know nothing about it other than what I read briefly on Barron's and what I looked up for like 5 minutes before. But they're a pharmaceutical company. Of course, the requirement, if you look at market cap, all of these are trading well above the market cap requirement. If you look at EPS as well, the only one that's a little bit off is ALNY. That's on an annual basis. It's like, why is this? Yeah, so they're barely positive as far as EPS. SoFi, of course, is right there as well. If you look at some of these, I think Ferguson has been talked about a long, long, long time. For whatever reason, it's never gotten in. I think it probably has a strong chance to get here. And then the other 2 that are interesting is Vertiv. It's one that is still kind of positioned well for the AI play specifically. It's been talked about for at least a year and a half getting in, and it's likely going. I always got this and Vive, and I'm like, okay, which does which? Vive is in, so I don't have to do that anymore. But Vertiv, I think likely gets in here in the next either this time or next time. Now you never also know how many slots that there are. Ares is one as well. Ares Management, that it's just been talked about a long, long time of getting into the S&P 500. It may be time as well. So yeah, we'll have to see. Now EPS, market cap, those aren't all the measures that they look at. It's a little bit of a mystery. We know the minimal requirements. So yeah, I think by the end of next year, though, we're looking at probably a 95% chance that SoFi is in. It's one of those things where it's a nice churn in the top. It's a good recognition for those at the company that have worked really hard on this. Oftentimes very meaningful, a stepping stone along the way. But and like for a company like SoFi that's more heavily retail owned, you'll see a little bit upside buying pressure basically from institutions than you might expect otherwise from a very heavy institution owned business.
Mm-hmm. So do you want to disclose an actual percentage for December, or are you sticking with 11?
I mean, like, seriously, I think it's about 10%. So I'd like about 10%. We'll round it up to 11% because we know why. So like there's a chance. There's more companies that are just like this. There's almost always one that they include that I'm like, I barely heard of it, or I haven't thought of that company in years. And they're like, oh yeah, this exists. We're putting that in. Once this year, we saw no inclusions at all. They made no changes. SanDisk, of course, was the most recent inclusion. I'm getting the weeks kind of confused because of Thanksgiving, but in the last 2 weeks,
November
SanDisk got in.
November 28th.
November 28th. Thank you. And they've been doing like incredibly well. That business has benefited immensely from AI waves as well. So yeah, there's always a chance that they only like do nothing, or they're like, hey, let's do just 1 or 2 names, or they pick some company that nobody has ever heard of. So with SoFi being where it's at as far as market cap, as far as, they've added a lot of fintechs recently. So I think that spells a really good thing, by the way, for next year. But they might just say, hey, too many fintechs recently. Let's slow it down a quarter or two. That might fit in as well. So yeah, you can see it right there. A lot of fintech.
And look, you had 3 editions in September, 1 edition in May, 2 editions in March. And so you could have more, you could have no editions, as Roy said, but you could also have more than 1 edition. Like SoFi could make it in along with another name here in this list.
Yeah, and Block should be on there too, but yeah.
Okay.
Was that Grok?
This was Gemini, I believe.
Okay. Short Google, I guess. So.
Short Google, yes. Okay, hold on. I'm gonna show you the funniest thing, dude. Oh man, I don't know if you saw this or not, but I posted this and it was hilarious. Oh man, do I want to play this clip? Yes, I do. I do. I don't know if you saw this, dude. Can I play a clip here?
Sure, as long as is there foul language or?
I don't think so. I'll turn the volume off. So, did you see this?
No.
Oh man, you miss out on like the funniest stuff on the internet, dude. All right, police like shootout. There's a suspect on the ground. Waymo just fucking drives right through the crossfire in the middle of the standoff between cops and it's insane, dude. I mean, it didn't see any traffic. It just went right through, man.
So if we're ever pinned down, Tevis, we just have to order a Waymo, several Waymos actually.
Yeah. I was like, bro, imagine being the passenger in the situation. It's just insane. What are you doing?
The situational awareness. By the way, my wife's vehicle, I've been able to. I drive it like once a week. She's the main driver. They rolled out full self-driving 14.12 or 14.2, and it came with a free trial. We haven't used it in that vehicle other than the first month that we had it, and we thought it was, I thought it was really good, but yeah, it's just so smooth. There's still one chronic issue that like every version of full self-driving for some reason fails to know along this stretch of road that I take every single day to work, that lane is ending, and it always puts you in the wrong lane and it tries to correct it way too late. So but man, yeah, I really think Tesla's going to win that race. There's multiple winners, but like I don't know though. Like, is that one of those things that they end up like? It's so niche. How does even Tesla like figure out what to do in that situation?
I mean, I don't know. It's just great. And then like people are commenting on this thing. They're like, "What if the suspect like jumped in the Waymo vehicle?" And I was like thinking about this. I was like, dude, to what degree is Google liable for having a legitimate getaway vehicle in a crime scene? It's just crazy, man. I don't know. It's a crazy world we live in. Yeah. Can you imagine 50% of the vehicles on the road doing that? Exactly.
Q&A?
Yeah. Did we have anything? Hold on. Let me see the list because I think we had a bunch of other topics.
Maybe.
HIMSS, blood testing, Hood, Amazon's new in-house chip. Do we want to talk about any of these? NVIDIA, Google.
Yeah, let's do a little bit on the NVIDIA, Amazon, Google, not Trainium, Tensor chips. So, yeah, you want to take the lead there, or?
Well, all I know is Amazon announced their own in-house chip to rival NVIDIA, and they were up a little bit in trading hours today, and that's pretty much it. I don't.
Yeah. In Tensor chips, this is Google's GPUs was a thing from last week as well. So kind of similar headlines for Google last week that was related to them not only using it in-house, but also potentially selling that to Meta on the understanding of efficiency. I posted this last week. There's a report that I read, and it probably comes into play for Amazon too, although we don't know. So one thing we don't know, by the way, is Google's next generation of TPUs. We don't know how they'll actually perform, but we know what they claim. We know what it's effective at. And is there a point where TPUs overtake GPUs as far as efficiency? Yeah, that could absolutely happen. But efficiency isn't the only measure by which companies are buying GPUs or TPUs. And so if you look at peak system output and throughput, you can actually see right here NVIDIA performing very, very well across a lot of different types of LLMs, or that's actually a Llama, a lot of different types of the chipsets. And then you can look here and also see peak system output and throughput on Llama 3, which you see have AMD right there, Google right here as well. NVIDIA just crushes them. This is with, older chips. So we'll actually have to see, how Ironwood, that's the 7th generation performance for Google. Amazon makes a claim that they're more efficient. I'm a little bit skeptical in there. I've never seen this as a winner take all space, which would be ridiculous, because there is credible competition out there. AMD is one of those, but they're best in class. And I don't see anything that's going to really shift that as well. Now, the market might disagree, and that's fine. But when NVIDIA was trading in the 170s, I was so tempted to just say, all my free cash, boom, NVIDIA.
I mean, look, man, I made a video earlier today, and the video was commentary around this entire debate that was happening on X around Iron versus Nebius. Very informed takes on both sides, and basically what I said in like as a conclusion to that video was, this is an expanding market, and there's going to be more than one winner in the market. If the total addressable market was contracting, then I could see a world where it's a winner take most, if not a winner take all, because the total addressable market is contracting, it's getting smaller. But in a world where data center buildouts are increasing, in a world where AI total addressable market is going to be much larger tomorrow than it is today, I think we're in the early innings, and I think that you could hit a dart at a dartboard between NVIDIA, Google, Amazon, AMD, Meta, and like you will make money in the next several years off the back of AI alone. And I know that they don't all play in the GPU, TPU space, but my point is like, it's such a massive total addressable market, and it's expanding. The use cases are expanding. The efficiency is expanding. And so you're going to make money either way. Like that's the realization that I've slowly come around to. And it's also the reason why, Nebius is such a large percentage of my portfolio, and why I want to also add Meta and also Amazon. So I don't understand this tribalism, with so many companies are like, oh, NVIDIA is going to go to zero because Google is now building in-house and Amazon's building in-house. And I'm like, dude, I'm sure they'll be fine,
Yeah. And I think most people see that, but there's always a little bit of an overreaction, and that's alpha. That's an opportunity. If you see things otherwise, you're like, the market is wrong, and you end up following that or chasing that. One thing that I do really like about these type of things from Amazon and also from Google, there's hints. I won't say that we have proof and evidence, just because Airtest Systems cannot review or cannot share and disclose who their partners are. They can just say that they're major or best in class or top 3 or something like that in specific spaces. But I think it's likely, based on some of the comments that they've made, that they're actually working with Amazon specifically. It's Trainium, right? Is the chipsets that they're using. And I know that they're working with NVIDIA. They have to be at this point. They might be working with Google. I'm less clear on that. But the cool thing is the way that they're positioned in the relative price and opportunity there that I see in air. And it's going to take, probably at least 2 quarters for us to actually see revenue acceleration on that front. But whether it's TPUs are going to be all the rage, whether that's NVIDIA, whether it's AMD, whether it's Google, whether that's something else that we're not even naming today, whether there are more complicated chipsets that include increasing amounts of DRAM, or flash memory is at an extreme need because of data centers and what's going on with AI. Airtest Systems tests all of that, and they have some products are like, a lot of people, different people offer that. Airtest Systems are very broad, and also some of the things that they do, they're the only ones that can do it, like gallium nitride. That's a little bit different application than what we have here. But I'm like, man, the market keeps selling that off. It's up a little bit, today. So I like having NVIDIA, like very specifically, I think the leader in the space. I don't hate, owning Google, especially, and Amazon I think is okay, and they'll be fine. But I like Air because it's like, hey, no matter who wins here, they're going to win as well. So I don't have to worry too much whether it's going to be GPUs or not. Oh, by the way, I wanted to add this too. There's a fireside chat event, and there's actually several coming up tomorrow. I believe Nebius has one. I know that PayPal has one as well. And I'm forgetting one other company that I follow that has it. Is it SOFI? It is SOFI. Okay. But this came out today, and Amit reposted it as well. But the NVIDIA CFO was asked about their forward projection of 500 billion revenue in 5 quarters, which they made. Jensen did right there at the very beginning of their earnings call last time. And that 500 billion doesn't include anything from that new agreement with OpenAI. Not included here, but it doesn't include anything from China either. So it's basically a pretty conservative estimate, though a lot of bears are like, hey, it's fake. It's not real. Like they've done this time and time again with NVIDIA. And any chance that they get as far as a weakness of, oh, Google's TPUs are better than expected and they might have a partnership agreement with Meta. I mean, that's not like the best thing for NVIDIA. The market just overreacts and acts like NVIDIA doesn't know what they're doing. They're not trading at a, relative to their growth, I think especially for their growth, a very cheap multiple.
Yeah, I agree. And like, I think all of the fabulous 5, as Steve calls them, are so this is basically Mag 7 minus Tesla minus Apple.
Yeah, that's I mean, that's fair. I would include Tesla in there, but I mean, maybe I'm biased because I own 2 of them. But Apple, yeah, kick them out. Despite, I think, all-time highs. They're all-time highs, right?
Did you see? I don't know, man. I don't follow that shit. Did you see their chief AI chief AI intelligence officer or something quit? And the comments were just roasting Apple. They were like, they had that in the first place. They have AI. It was just, I don't know. It's hilarious. I don't know, man. They've made themselves the butt of the AI joke, you know?
Yeah, the all-time high.
Insane.
Their price to earnings
anymore. You know, like you get too old, and then technology moves on, and you're still stuck in your little bubble. And like that's where I'm at. The world doesn't make sense. Apple is still at all-time highs. I don't get it.
There was a point last week, and I probably should have posted it because it was wild, where Nvidia was trading at a cheaper forward price to earnings for next year than Apple. Nvidia, like, what are we doing? There's a little bit difference in terms of growth there, guys, but part of it was the market was on a flight to safety mode, and anytime they do that, they gravitate towards Apple, and they talk about the fortress balance sheet, even though if you look at their cash to debt, it's not actually the case. Cash flow is fine, you know, it is a safety stock, but I think its days of being just this impenetrable fortress with a massive moat are overblown, but the market disagrees. All-time high for Apple, so congratulations, shareholders.
Congratulations, boomers. All right.
And Evan, if you watch this, congratulations, Evan. You're a boomer now.
Boomers and Evan. And Evan's losing his shirt on BMNR alongside the both of us. So I'm glad something in his portfolio is going up.
So it was really funny. Like we talked about it one time where he was like, I'm not taking enough risk in the market. He's stock market news on X, guys. Really nice guy too. But he was like, I need more risk in my portfolio. And so BMNR was what he chose to do away from, I don't think he sold Apple necessarily or anything, but yeah, it's funny that his safe, secure play has performed ridiculously well since that move. And also since that time, BMNR has just tanked. So welcome to risk.
Yeah. Yeah, exactly. Guys, Apple stocks was a game changer. Obviously, they're at all-time highs off the back of socks for phones. Who would have thought of socks for phones? Apple did, and that's why they're what, $4 trillion, $5 trillion?
Yeah, it's deserved. 4.23 trillion.
$4 trillion. Socks for iPhones, baby. That's how you get there.
Yeah.
Apple would have been $100 or less at least if they had not bought back $100 billion in stock for years. Apple still has nothing but phone sales and buybacks. That may be the play. Yeah, dude. Absolutely. I agree. And they've been doing it for a while. They're the biggest purchaser of Apple stock is Apple, and it's obviously working. Okay. Let's go into questions, Roy, unless you have something else.
No, that sounds good.
Cool. Do you know when the Fusaka update will go live, like time-wise? Tomorrow. I don't know the exact time tomorrow. I wouldn't expect to like wake up and ETH is at 10,000 because we saw it going live. It doesn't really work like that, unfortunately. But I believe there's going to be a vote of some sort, and then there's a hard fork, and then it's going to be live.
So it's just going to go live, and there is a specific block. I saw this, and I'm not finding it. Yeah, ask two LLMs, and if they agree, it's probably right. But I think it was noon Greenwich Mean Time, but I could be wrong. So double check that. I'm sure you'll see announcements. You'll see it all over X too. So,
yep, exactly. Are you going to talk about Nebius versus Iron? Well, you're in luck, Tommy Jerry, because I made a full video about this, and I really don't want to rehash Twitter drama. I did call it like the Real Housewives for stock investors because it's like, no, you're wrong, and no, you're wrong. So that's it was quite funny. But if you want all the tea, then definitely go check out that video. Take a look at the last 3 times HIMS crossed above the 20-day moving average. We were just so very close. Do you guys still have hope and or shares?
Yes. Yeah, we talked about it last week, HIMS Labs, and I have a separate video as well. I know that Tevis has talked a good bit about this too. We're very excited about HIMS Labs. For myself, and I think Tevis, you're somewhat similar. I see this as more of a mid next year type of play, that it might be dead money between now and then. What that effectively means is I've reduced my position intentionally when we were much higher. Till now, it sits below a 5% threshold, and I'm happy to get HIMS back up to 10%. I'm in not a great hurry to do that right now necessarily, but I probably, when we hit January, I'll be a buyer at that point at the current level that we're at, as long as nothing has changed too much. And of course, everything does change between now and then. But I'd like to get a read on their next set of earnings. So we'll see what that looks like. There are some yellow flags, I think, more than red flags. I think the thesis is still very much intact through 2030, even if we have some chop, for the next 6 to 8 months.
And there will be chop, that's for sure.
Yeah.
For myself, my hope and my shares have fallen proportionately to one another, and that's deliberate. And I think they're going to fall more before they rise. And largely it remains on the side of management to prove me wrong, or my doubts, to assuage my doubts. TBD, man. There's outstanding questions on HIMS right now, and I don't feel comfortable with it being a 10% position, which is what it was. Granted, I did just lock in a ton of freaking gains on it throughout this year, and the position that I have is all house money with HIMS, and I want to reduce that even further. Again, in my pursuit to go further into safety. But I think the opportunity is good, so long as management can actually execute and capture it. And I think that last part is where the doubt has set in, and that was not there at the beginning of this year. Okay. Hi, just joined. What did I miss on SOFI? A whole segment, my friend. So jump back to about an hour or so, an hour and 5 minutes on the stream. And that's when we talk about SOFI and our probability of SOFI joining the S&P 500 in December. What do you guys think of security stocks? I am long in SentinelOne, and other stocks are presenting good earnings. Yeah, I believe CrowdStrike just reported earnings today. Roy, did you see this by any chance?
I didn't. I think it's a great company, though. I loaded up. I think I had 3 stocks in my paper trading stock competition, and I'm losing that. I don't know if I can come back, but they've not performed well. Zscaler, CrowdStrike, and I don't think I grabbed SentinelOne. It wasn't Rubrik. Forgetting which other one. It wasn't Palo Alto either. But yeah, I like the space. The problem is, like, I don't really have a deep level of understanding there, even though I see the need. And so if the market gives an opportunity, a ridiculous opportunity in one of these, FTNT is another name out there. Rubrik, I actually do understand a little bit more, and I like that one a lot. But I think long-term, it's a really good opportunity. I guess I just had the 2. I know what it was. I had, I think, 3 or 4 names on the list. of my like next stocks if there was an opportunity, and one of those was another security stock. I was heavy on those names. So, but Sentinel-1, I don't know. Like if you remember, like CrowdStrike had those outages. Sentinel-1 and CrowdStrike have a rivalry. Very different types of companies, a very different type of mentality as it relates to cybersecurity, and I don't really fully understand that. And this is one of those spaces where sometimes I'll have connections and friends that understand this domain very well, and I don't have any like I have some acquaintances that I can ask questions on, but so it's a hard thing for me to invest much money in something I don't understand, and I feel like I would have to put in a ridiculous amount of work, which I don't have the time for right now to be able to understand it. So, yeah, at some level, though, like the risk reward gets skewed. If there's another silly sell off with CrowdStrike, maybe I'll get in at that point, but I'll probably just be on the sidelines.
Yeah, agreed. It's one of those that I've liked for a long time and never owned. Is Bitforge rumor true? I haven't heard about the Bitforge rumor. I don't know what that is. Roy, do you know what this is?
I just pulled up X and it says, yeah, there's a link to a video. I don't think I want to play this necessarily, but no, actually, Bitforge development by BMNR. I don't know. I don't know anything about it really. I see a couple of rumors there, but I don't even put them on the screen because I don't know if they're credible or true, and I don't know if it's a big deal even if it is. So yeah, we'll have to see.
Yeah, send that to me in DMs. I want to take a look at it afterwards. Cool. Thank you for that question. How much can BMNR make on staking? So we covered this. It's about 3% or so. So a couple $100 million in net income from staking. I think Tom Lee said about 400 million. So TBD. BlackRock is going to launch stake. Oh yeah, I threw this up already. Come back to SOFI. What's your price target year end? Anything on S&P inclusion? We talked about S&P inclusion. Price target year end, Roy?
25 for me.
25. I'll go 30.
I haven't really moved it. Like that's what I had at the beginning of the year. I think I did at one point say I'm going to, and like, I said 25 in January. Why would I change them? So maybe we'll get it. Hopefully it's higher. Probably will be higher. Next year, of course, into next year is when it's much higher for me. So
I'll say 35 and call it a day. What are you going to do with your BMNR call debit spreads for 27? I'm just holding right now. I added a little bit more to them actually a couple of days ago because I'm a fucking degen, but I'm mostly just holding right now, and they're for 2027 anyway, so it doesn't really matter.
You're a degen.
Why not BMNU? Because it's leverage on top of leverage, and you can get wiped out really, really quickly if you're not careful.
Yeah, at some point, like you have to say, okay, this is enough risk. So, like, if you're saying why not BMNU, somebody on the other side will say, well, why not options on BMNU? It's like leverage on leverage on leverage. That could be a lot of fun in good times and absolutely terrifying and terrible in bad times. So I sold and wrote cash secured puts on BMNU. Those filled, and it's like way, way, way underwater. And that could be painful for a while. I think it'll be fine. Like I just have literally 100 shares. It's not
just buy more. Buy more.
No, BMNR, Ethereum. I don't really have a need to get BMNU.
You gotta average down, bro. Yeah, it's crazy because BMNR like was up 20% a couple days ago, and then it was down 9%, and then it was up like 7%, and then it was down 8%, and then today I think it was up like 10%, and it just. I'm thinking about options on BMNU. These guys are like, I'm rich, I'm broke, I'm rich, I'm broke. Like it's insane, dude. Okay. Has BMNR said they're going to return staking revenue back to shareholders or use it to buy more ETH or invest in ETH-based companies? They haven't said yet what they're going to do with the proceeds, but the fact that they started paying out a dividend suggests that they could potentially raise that dividend in the future. Nothing has explicitly been said by management, though.
I think based on the CEO that they brought in, he's kind of a venture fund type of guy. It seems like he has maybe some talent in managing a portfolio of investments. I think that they brought him in, and that signals that they're going to be investing a lot more in moonshots. And so we'll have to see, though. I wouldn't want to see that become like an insane amount. Like most of what they do should be around Ethereum and based on Ethereum. If they like allocate up to 10% of their company on moonshots, I'm okay with that. If it's like 50%, I'm like, I'll be out. I'll be honest.
Yeah.
I don't really like orbs. I do think that there's some projects out there that are very credible and interesting. Yeah, we'll have to see.
Yeah. Okay. Let's go to the next question. Tevis, do you believe Duolingo could become a $30 billion company in the future as long as management? Dude, absolutely. They were almost a $30 billion company like last year. Earlier this year. Back in May, they were trading at $544 a share. And today they're, $8.5 billion. They're trading at $182 a share. So it's like they've already been there. So it's like saying, do you think Duolingo can go back to all-time highs? Yeah, absolutely. They can if management continues to execute and expand outside of languages. I think there's a possibility there for sure. But it really depends on management executing. And right now, I think the fear is that AI is going to eat their lunch. I don't necessarily buy into that fear. But at the same time, I think I'm personally a little bit more strapped for cash, and I want to be rotating into these safer positions right now. So that's why I'm making that move. It's no reflection on like me not having faith in Duolingo. In fact, if the tables were turned and I had the safe defensive portfolio that I want to have, let's say I already had it, I would be looking to open a position in Duolingo here because I think the reward to risk profile is in my favor.
So if your portfolio was 100% Apple, you would then look to open up something in Duolingo.
I would be at all-time highs. So yeah, I would be probably looking to, rotate some of those gains around. What is the SOFI stablecoin going to be on? I think Bitcoin's network, but you're wrong.
I'm not sure that they have shared that yet. So they'll launch on one network. I would assume that it's Ethereum just because that's where almost every stablecoin launches initially. And then what happens is you begin to deploy to other protocols as well. Bitcoin is there's not stablecoins are not built on Bitcoin very often. We already saw.
I think they mentioned Lightning though. I think they're going to be on Bitcoin, but they haven't talked too much about it.
Yeah, the remittance product in the Pay by Crypto is using the Lightning network, so that's Bitcoin. But I don't know about the stablecoin itself. Maybe, but
we're going to find out in January when they launch it. That's for sure. Difference between owning BMNR and a leveraged Ethereum ETF like ETH. Well, so for one, you have the moonshots and BMNR. If those do really, really well, then you're not going to have that upside potential in other positions. And then the other one, you have the sort of the premium that they have as a digital asset treasury company. And then you also have the trust and management to navigate better than something more passive like an Ethereum ETF, assuming both have staking, right? When do you think BMNR is going to achieve the 5% goal? January, February?
Yeah, I'm thinking actually March, but I could be wrong. I was thinking March actually based on last update, and they ended up adding a little bit more Ethereum than I expected. This, especially as they're trading closer to the MNAV. They have a lot of cash that's right there, and they don't really say. So let me throw this up again. I know we looked at it earlier.
So let's just do some back of the napkin math before you throw that up.
Okay.
They're at about 3.7 million right now, ETH? Mm-hmm. Okay. They're at about 3.7 million ETH. They need to get to 6 million ETH, right? So if we just do 6 million minus 3.7 million, that's 2.3 million ETH that they need to accumulate to get to their target. They're accumulating about 100,000 ETH, give or take, per week. Some weeks it's more, it's 150. Some weeks it's like, I think 87, 86. But let's just say if we assume that it's about 100,000 per week, that's 23 weeks of accumulation, which is 5.5 months, roughly. 5.5 months. So you have December, January, February, March, April. Yeah. maybe May. Now that's assuming 100K buys every single week.
Yeah, and you can see some weeks, of course, were a lot more, but this was when they were trading at a much higher MNAV. So a lot of it, I mean, it just depends on the price of Ethereum relative to Bitmine itself. So if we are where we're at right now, which is not nearly as good as where we were, a little while ago, yeah, if they add 100,000, like they're going to get there, I think, in the first half of next year. When that has to happen, like it's not as important, just as they continue to make momentum towards it. So, but
Now,
this is slowed down. You can see from some of those massive buys that they had very early on.
exactly. And now, again, we did the back of the napkin math with 100,000 ETH weekly purchases, which brings us to April, May. And so you're going to ask me, okay, well, Tevis, why do you think it's going to be end of January or February? Well, because they have like $900 million in cash. If they wanted to spend some of the cash to buy that Ethereum, they could accelerate that timeline massively. But right now, every single week, we see them accumulating more and more and more cash. Presumably, I mean, they could even make an acquisition and like acquire some ETH by proxy like that. If a company is trading like below MNAV or they have a deal of some sort. So I think they have options at their disposal to get to their 5% target sooner rather than later. But again, if we assume 100K per week, then it takes us about April.
Yep.
Okay. You guys think SoFi could be a candidate for Trump accounts? Absolutely.
Noto is on the board there, so yes. Yeah, there's going to be. It's not the way that works is. I don't remember the term for it. I looked it up at the time when those Invest America or Trump accounts were announced, and SoFi, Robinhood, many major brokerages, some niche names as well. There's going to be dozens and dozens and dozens and more as well. But yeah, SoFi's already there. They're fine.
Yeah. What is the retail institution split for SoFi? Go to Fintel, dude, and then you'll see what the institutions hold.
Yeah, institutional ownership has been climbing some. It's been a little while since I've looked at that. But a lot of names that enter the S&P 500 are like 80, 85, 90% institutional ownership. I believe SoFi is over half now. Let's see.
Yeah, it's 55% is what I'm getting here.
Yeah.
So, yeah, 55%, 60%. And yeah, that's going to keep going up, especially if this thing goes to the S&P 500, it's going to keep going up by quite a bit.
When, not if, but yes.
Yeah. When this gets into. And by the way, Be Kind. I know your name is Be Kind, and I just read that after I started this rant. We're not a fucking LLM. Just ask Gemini, dude, or go to Fintel. But I appreciate you asking us, and I'm sorry I'm coming down on you, but yeah.
Yeah. By the way, if you're asking something that you don't know or you don't know where to look up and it doesn't have resources, ask 2 LLMs. That way, if you get the same answer, it's probably okay. And if one says 35%, the other says 85%, you got a problem. You just have to look it up yourself. So,
yeah. What is our most speculative investment right now?
Probably air test systems, just because it's under $1 billion market cap. Maybe VG, but that's an invest and investigate. So I'm liking what I'm seeing. I actually doubled my position last week on stream. I'm going to do it again right here. No, just kidding. It's trading very attractively. I liked it in the 7s. It's in the 6s, so I like it even better. But yeah, probably air, just because even though they've been around a long time, they are a micro cap. Like, it's easy to see with VG. Arbitration's still a thing. There's some legal overhang. the way that they actually develop their LNG, like the capital expenditure piece, which is like a significant piece of the story of LNG. It is differentiated. I don't understand why competition isn't moving that direction, other than just why change what's working fine for them. But VG at some point will overtake LNG in terms of a market cap, in terms of revenue, maybe at some point as well, as these massive capital projects come online. So that one I feel like is way less speculative. Like the stock price can do anything over the next 5 years, and it wouldn't surprise me. But if I hold it for 10 years, I'm going to be pretty happy in 10 years. If I hold it for 5 years, I think I'm going to be very happy too. Air, that one, it's hard for me to see it not do decently well. But what I'm having a hard time trying to figure out, because there's such a small market cap, is if things go extremely well, like that extreme bull scenario, like the price target, I'm not even going to say on here, because it looks utterly ridiculous. And I don't think, I'm not putting a high percentage on the extreme bull case, but like a 10% chance. So yeah, it's speculative. Tevis?
I don't know, probably like next, because you have to wait for the build out. Maybe Lemonade, because they're not necessarily profitable yet. Maybe Hims, because there's still an outstanding question on the management. Those would be the first ones that would come to my mind.
Joby then.
I don't own Joby. I do not. I did not buy Joby during the Christmas. Dude, I got coal this Christmas. All right, I didn't get anything. I would love to participate in Christmas, but my friends don't love me enough to give me Google or some shit. They give me fucking Joby. Okay, when is the release date for the beta of the options journal tracker? We're going to be releasing in January. There's no specific date right now. It's going to be in January. We're still on track to make January happen. So really excited about that. When we release in January, we're not going to have the automatic updates from your broker. That's going to come soon, probably in the next month. So like February or March. We're going to have a beta tester program over the next couple of weeks for just a small group of people testing it out. But public release is going to be January, and very excited about that. Anyways, any thoughts on UiPath? No.
Yeah, I've not looked into the product in a while, since 2023, when a lot of people are trying to compare it with Palantir. And I took a look and I'm like, nope, people are wrong, and market agrees with me. So that isn't to say UiPath has a wrong or has a bad business model, but a lot of it was on the operation mining standpoint, what they could do. It's a slightly different term, and I don't remember what that is right now. It just doesn't look like, it looks like, so it's, I put it in the bucket of a lot of companies where I'm like Grab. Grab is one where Amit is all over, and he's like, hey, this is going to be a great opportunity. I don't see it. I think that they'll be fine and that they'll perform fine, but I'm not looking for fine in my portfolio. But I don't know enough about it, like since 2023. I'm sure that they've made a lot of changes. I see a couple of my friends talking about it. I'm exposed enough to SaaS, so I'll pass on it.
Can you guys hear my typing? I got a new keyboard and it's pretty click-clacky. So I'm wondering if you guys can hear that. Let me know.
I can't hear it.
You can? That's great.
Yeah.
Okay, great. Roy, if you don't mind, do you want to answer this or no?
No, I've not told publicly what it is. Tevis knows, but and a few others too. But I'm still, so I'm looking to get in the final phase. I have a self-imposed deadline that's tomorrow of finishing up basically the last chapter. I've got the conclusion. I've still got second reader and stuff, so a little bit while left. Probably will be defending in April or May, depending on, there's a lot of time between now and then. And at that point, when I'm all the way finished, I might share that and also what I do. But I kind of go back and forth. And if I'm not sure, I probably just won't, because we live in a world that's, I know everybody watching this, you're fine, you're decent, you're good, but there's weird people out there. So And I have my name is the only name type out there in the world. And if I share what my PhD is in or talk about the topic, I'm the only one that is doing that. So, yeah.
Any thoughts on ALAB dip? I don't know what that is at all. Do you know what this is, Roy?
Never heard of that in my life.
Let's take a look. A lab. Astera Labs.
Satellite company, maybe?
Astera Labs or pharma. I don't know what they do, dude. Sorry. You're asking what?
Semiconductor manufacturer and AI company specializes in designing high-speed connectivity solutions for data centers and AI infrastructure. Sounds like they're in the right space, but I don't know anything about them. So,
yep, I don't know. Je ne sais pas. Tevis, they got lots of money they didn't spend when BMNR was in the 20s. Are they thinking of another job? I'm assuming you mean BMNR had lots of money that they didn't spend, but you should say when Ethereum was in 2000, and Ethereum's still at 2000. I mean, I think Ethereum can fall lower. I think if Ethereum goes to 2400, then I would imagine they would be allocating a little bit of that money. But yes, you're right, Steve. They haven't spent their actual money buying Ethereum yet. That doesn't mean they won't. That just means they haven't done it yet. So TBD. Not heard any influencers talk about Carvana. It skyrocketed this year from 148. Wasn't it like $2 at some point? What's their ticker? CVNA.
I'll let you pull it up, but it's a wild journey. It's one that the market, and myself included, just kind of wrote off. Not everything written off after the COVID peaks is dead money. Carvana is case in point there. I don't know, I've not looked at them on a serious level. It's one of those, when they move really fast, it's hard for me to want to buy into that environment. It's just a psychological thing. It's usually not the right take, especially if it's a great company. But, it's like contrasting this, like another fast mover, which also was inducted in the S&P 500 this year, was App 11. And I see a couple of questions kind of on App there too. I'm not invested in App 11. I came close to pulling the trigger at one point, but I understand that space. I understand like they have differentiation there in terms of their model. Carvana might, but that's a very cyclical business, a lot more so than advertisement. And so, especially if there's consumer weakness or health. And then the last little piece with Carvana is I've heard some concerning rumors about management and about some of the revenue sources just being like, there's a lot of criticism towards the revenue, the circularity of it in the AI space. There's a lot of that there in Carvana too. And that's, at least to me, when I looked at it at the time, I'm like, I don't know if there's a little bit of truth there. It's hard for me to see how much. And I'm like, there's probably better options out there too. So I would say I'm more neutral, but it's an uninformed neutral at this point.
All right. Chat, we're going to go through a journey together. This is the weekly view of Carvana. You guys ready for this? This is going to be very fun. Okay. So we have a little IPO in 2017 of a company called Carvana at about $8 a share. And then it goes all the way to $72 a share. And you're like, wow, I almost 10x'd my money. And then it goes down to $30 a share. And you're like, oh my God, I'm down 50%. And then it goes back up to $76 a share. And it keeps going up to $115. Okay. In the next 1 year or so to 2020. And then from $115, it falls to $22 and it very quickly bounces right back up. It very quickly bounces right back up to $376. So from 22 to 376, it almost does a 20x. And then it falls all the way back down from $376 to $3.55 in 2022. And you're like, I have lost 99% of my portfolio if I bought this thing at the peak. I am doomed. This is going to zero. And then all of a sudden, it goes right back up to $413 a share where it's trading at right now. This thing is a roller coaster ride on wheels. Holy crap. Look at this. This is a weekly view, guys. This is a weekly view. It's done complete round trips from $0 to $400 like twice now. Insane. if this thing falls again to $3, Roy, I swear I'm probably buying a couple $1,000 just for shits and giggles, just for funsies, just to see if it does another round trip up there.
Yeah, barring something
Crazy.
that breaks in their business or is found out, I don't think it's falling that far. But
you don't know. It did it before.
Tommy's comment there, Tommy Jerry, money laundering. That's one rumor that I've heard multiple times, and it's hard for me to determine, like, okay, how real is this? I would, if I had to pick, I'd say it's probably not true, but not with a high degree of confidence. And I would rather, like, somebody throw out allegations and it's like just laughable. It's like this doesn't happen. It's impossible. It's not what they do. It's not who they are. You can see it on the balance sheet, all those sort of things. And I don't have that confidence with Carvana.
Yeah. Paul or Peter, we already talked about SOFI, dude. I don't know what you're telling me. We talked about SOFI about an hour ago. This is
go to the hour mark. Yep, go to the hour mark, and there it is.
So yeah, Carvana, I'm not touching it with a 1,000-foot pole unless it goes back down to 3. Then I'm YOLOing in. Are your HIMS positions just chilling in the background? At what point are you eyeing dip buys?
Yeah.
Yes.
I already mentioned. Yeah.
And no.
Yeah. Next year I might start buying HIMS. I'm going to wait until after their next quarterly report. So, I mean, barring like a silly dip, if nothing changes and the market hasn't really shifted massively, but for some reason HIMS is trading in the like low 20s, yeah, I'll double my position there.
Okay. Are you guys tracking construction speed or delays on data centers? Mm-hmm. As much as I can be, I think that's a really good indicator to be tracking. I'm tracking the new location, so the application permits that go in for like Equinix is one of them, and Data One is the other one for Nebius. I'm not necessarily tracking, like, I don't have like a spreadsheet of how long each data center has taken. If there is a resource that you would recommend for us to look at that, I would love to be tracking that more actively. What are some of the safer plays you're talking about? Would you consider adding Morgan Stanley as one of the safe plays? Probably not. So I want to go into Amazon and Meta as cornerstone positions. So by the end of the first quarter of 26, over the next 3 months or so, I want to have double-digit positions in Meta and in Amazon. Now, why 3 months? Why not tomorrow? Just because I want to do it in a safe way where I can tax loss harvest some positions that are not doing great. I can do aggressive covered calls to get out of those positions. I can get out of some margin that I'm in and just completely restructure my portfolio to be safer. There's also a lot of consolidation that I want to have in the portfolio right now. So yeah. What am I asking Santa for this year? I haven't thought about what stock I want in my stock draft, if that's what you mean, Elijah. If you mean just like in life, I'm asking Santa for my startup that I'm launching in January to go well and for it to be a product that people use. And everything else I probably shouldn't say on camera. What about you?
Billionaire problems, am I right?
No, like, yeah, let's not. Yeah. What about you, Roy?
Yeah, I just, I'm focused right now on dissertation mode, knocking that out. So nothing related to investment. Not so much anyway. And just extra time with the family. So nothing earth shattering or groundbreaking there. But it's a kind of nice reminder having the holidays, family, other things I'm working on too. Love the markets. Markets are important to me, and they are important. Love this too, but you have to remember the reason why you're doing it for. So Christmas time, Thanksgiving, it's nice for that.
Yeah, and very grateful for all of you guys that are choosing to spend your Tuesday night with us. Love you all. Here's an ad from me to you.
And while that ad is running, I will say, so some places Santa is actually already there. You kids after Thanksgiving in malls and stuff. So I figured, it wouldn't hurt just because, the market's been tough on a couple of my positions. So I went up and I asked if I was too old, and Santa said, "You can't sit on my lap," but you sit right next to me. And so he asked what I wanted for Christmas, and I said I'd like to have a unicorn. And he's like, "Well, those aren't real. You can't have that." And I said, "Okay, well then I like PayPal stock to go up next year." And so he said, "Well, what color of unicorn would you like?" So
You said yes. Oh, Patrick, you said hi, Roy and Tevis, and I threw that up on screen while Roy was talking. Man, don't give me that. Jeez, man, I can't impress everyone, I guess. But I got to start thinking about what I'm getting the guys for the Christmas. We got to think about the Christmas stream, Roy.
yeah, definitely. Oh man, and who is currently winning that? It's certainly not me. Early part of the year, I picked Hims, gave it away, and boy, it's lost its early lead. So,
Yeah.
do you know who's winning?
I don't know. Is it me?
I don't know.
Please don't tell me
It's not Block. It's not Block.
All right, hold on. Let's check.
Transmedics is up 113%. That might be the winner. That's Chris.
Joby's up 70%.
Yeah.
Lemonade 98% for Lemonade.
So it's Transmedics right now.
Wow.
Yeah. So yeah, it might be Chris. If so, Chris gets to set the rules for this next year, and yeah, we need to be thinking about what stock to give away. So and who we are giving it to. So yeah, what do you view as coal in case you get Tanner again?
Dude, it's crazy because I hate the Joby present, but I also don't blame Tanner because last year Tanner literally got coal from me. He got Unity, and he's like, "Screw this! I'm never having Tevis as my Secret Santa again." And this year, I gave Chris Lemonade, and Lemonade is up literally double. It's up 98% year to date. And so I just think it's just Tanner with a bad luck. He just picked the wrong year, but I don't think he picked the wrong horse. I don't know, man.
Yeah, and I get coal every year too. So Block.
Yeah, well,
please don't let Steve give to me again. I love the man, but he gives a bad gift. So
you know the crazy thing? I just checked Unity stock. Unity is up 81% year to date this year. I think Tanner just got the wrong year to get Unity stock. Oh man, that sucks. That's funny. Yeah. Gift BMNR. Maybe. Tanner loves Tanner. Okay. Let's continue. There's a couple of other questions. Roy, what's your price target for App 11 and 26? Do you have one?
Yeah, I don't have one. I don't, I track that one, but I don't track like so closely to have price targets on it other than just advertisement. Look at what is expected for the advertisement industry and probably add some in terms of what App 11 will do for revenue. I think that they have a lot of advantages in-house. And so they'll continue to compound and grow. What that looks like as far as stock price standpoint in 2026, I don't know. So let me add this though. It is a midterm year. There's a lot of ad spend on that. App 11 doesn't benefit quite as much as some of the other traditional advertisers do, but they still do benefit. So might be part of the reason why they're running so much.
Yeah. Hi guys, question. Assuming PayPal ever does move, big assumption, how high and how quick do you think the repricing may be? I realize it's just a guess. Interested in your guess. Thanks.
Well, I still think that by 2030 we'll see an all-time high. I don't know. So the one thing that I think might cause it to reprice quite a bit and quickly is guidance. But based on comments from the fireside chat from Alex, Chris, and also the CFO from the last month, it sounds like they're being very cautious. They were last month as well when they issued guidance, and just some of the things that they've mentioned on fireside chat too. They did post Black Friday numbers, sort of. It was just a select few. Some of those I'm like, well, that's expected. That's a nothing burger. And a couple of them are like, hey, these are great reads. But unless they come out and they are showing that the new product lines are working well, Fastlane, advertising, PayPal World, and others as well, which I used to think that they were going to do that in quarter one or quarter four earnings rather in January, or I guess it's February technically. I'm less confident in that now. So it's not another transition year. It's not quite the right term. I did call it that at one point, but I could see a little bit of a repricing if things go well, assuming things go well in quarter four, but it's not going to be nearly as quickly as I expect. And that's one of the reasons why, I sold the leaps that I did in my non-tax advantage account, and I may not rebuy. Happy to hold the shares, and I get a little dividend on that too, and the shares can do whatever. But man, I'm not sure, and that's one of the reasons why I don't want to hold leaps right now, other than the bit that I have that's already toast. So why not hold those a little bit longer? Those are, by the way, pretty conservative. They're $90 by the next January. So you would think PayPal will be trading at that point, but we don't know. What do you think, Tevis?
I think PayPal, I have a calendar reminder for myself to potentially get into PayPal in January ahead of the Q4 earnings. So it's probably going to be a calendar reminder that I'll probably ignore for a couple of weeks. And depending on what my financial state is, I would probably be looking to write some leaps in January, and just to have asymmetric upside versus the risk, because leaps have gotten blown up over the past 2 years because this thing hasn't moved. I think it's finally going to be time for it to move and get repriced. And I like the risk to reward if I write the leaps in January. So that, I might open a position if I really feel like it, but I don't think so. If anything, I'll probably do the leaps in January.
Yeah, the main issue, like over the short term, is the analysts, which they do the price target upgrades or downgrades and the revisions as far as earnings. They really only care about right now PayPal branded. It's not the most important measure for PayPal. It probably was 5 years ago, but right now it's not. It's still important. Excuse me. But based on some macro conditions that they have, there's some tariff overhang the previous quarter, some German outages as well. I was thinking branded would accelerate more than what it seems like that they're guiding for or indicating. Now, they might be a slight upside surprise, but it's going to be a while before we see branded accelerate meaningfully. I think revenue will before then, just because of the Braintree overhang has been lifted, and there's some new products that are actually generating some, beginning to generate some money there too. But yeah, branded, it might take a little while longer, which is why for me, shares, not leaps. We'll see though.
Roy hates making money, so that's why shares, not leaps. Let's move on. What's the short-term thinking on BMNR after Fusaka on Wednesday? I will pair this with this other question. Is Fusaka supposed to be bullish for ETH? No idea what it is. So basically, you're going to have this upgrade onto Ethereum, and it's essentially going to have a bunch of quality of life improvements. So speed, efficiency, and overall, like the price is going to go down. There's also going to be UX user experience improvements. I think they're integrating the same technology that Apple has in Face ID. So you would be able to like validate, your wallet with your face. I think I read that somewhere as well. Essentially, the ecosystem is going to get more user-friendly, and it's going to get more accessible to use by more people. The idea is that more people start using it, and as you get more activity onto the ecosystem, then that's presumably going to make the price of Ethereum go up.
If you want to learn more, there's several articles that are written about it, or you can just go to an LM and say, tell me about Fusaka and PERDAS, PERDAS. On top of what Tevis said, it's largely about efficiency. So you can kind of think about Ethereum as a superhighway, but one that can get congested at times. Now, the previous solution was layer 2s, which are like bypass roads that go around and eventually fork back in. And there's a cost to that. Think of it about like tolls going off and on the Ethereum superhighway. What used to happen and is changing is every single aspect of the blockchain, every validator, you need to validate every single transaction. Now instead, they can basically validate a select amount and ensure, based on probability. And they've run a lot of tests. They've done very thorough beta testing as well, through 3 different modules and timeframes. But so, like, another way to think about it, one other metaphor is, you can, if you're looking at pollutants in a river, you can test every single drop of water. But there's a huge expense. It takes a huge amount of people to do that. It really slows things down that you can spend time doing other things. But so instead, you can use probability to basically determine, like, how much water do we need to sample to be able to catch pollutants and feel like we're actually being accurate to an acceptable amount of error. Now, Ethereum, that margin of error is infinitesimally small. It has to be, just because that's one of the compelling aspects for institutions of the Ethereum chain. But so in essence, they're saying we are freeing up a whole lot of lanes in this Ethereum superhighway because we're no longer having every single aspect of the entire chain testing and validating every single blob. So yeah, in a nutshell, things are move faster, less congestion, gas fees lower. It might actually be a little bit less deflationary than Ethereum is. You might see very slight increase in terms of supply. That's like the only negative shift. Things are also cheaper, a lot better layer 2 support as well. And so it just makes the network a lot more durable, healthier, efficient. You have it. Your transactions per second are like, it's a very meaningful spike.
Yeah, I also saw this comment. This is going to be a sell the news event, and also this question around what's going to happen with BMNR. Look, the one thing I will point to is this diagram that I had here for my last BMNR update. If you haven't seen that, check that out. But basically, you saw a 38% rally right after you had the last major upgrade with Ethereum. Now, you can argue that there's other circumstances with regards to macro that led to that rally back in May, but we were coming off of a drawdown in Ethereum and we had the upgrade and it just completely went to the highs. We're also coming off of a drawdown heading into December 3rd. So if the trend repeats, then you could potentially see a rally as a result of Fusaka. So I don't know if it's going to be immediately sell the news or if it's going to rally afterwards, but that's the idea.
Odds of it being a sell the news event are incredibly low. Usually you can tell based on price momentum. If Ethereum had just absolutely been on a relentless tear the last month, I'd be like, hey, it's probably sell the news. High degree of confidence. I wouldn't be selling in Ethereum. I might have bought just some puts on like BMNR or something like that, just short term as speculation, small position. It's been the opposite. So if most likely neutral, nothing really happens or shifts, to slightly bullish, maybe even more bullish than I expect. It's a known event and we've not run up into it. So yeah.
Okay. I'll throw this up and I'll let you answer, Roy, and I'll be right back.
And of course he left, so I can't show the actual stats and everything. So the short answer is no, we haven't talked about that. And when Tevis gets back, let me pull this up real quick. I'll actually show it's an okay update, and I was hoping Alex would do something like this. Frankly, the numbers that they showed in 2023 indicated a whole lot more as far as where PayPal was out on Black Friday and Cyber Monday. And then the update that they did last year as well, I believe it was a little bit less detailed than 2023. And this is less detailed as well. We don't know. We know some. We have some reads on some of the ventures. And I know why they did it this way. Basically, they gave a read on omni-channel, which has been one of those 3 main aspects that PayPal has really been focusing on this year. They gave a read on buy now, pay later. That's something that they've really been focusing on over the last few months. And that's one of those growth vectors next year. And they gave a read on Venmo specifically. They've been focusing on monetizing Venmo, doing a great job of that. Not everything has been great at PayPal, but that's one of those like excellent things that they've done with Venmo. And so we've seen omni-channel Venmo and buy now, pay later reads. A little bit more to it than that. Tevis, can you throw this up? It's a 30. I'm going to actually pause it along through. We'll talk about kind of each of these. And let me just mute it. So yeah, this is their update.
55,000 transactions per minute, over 100 million customer accounts.
It's good. It doesn't matter too much, but they're nice numbers. 14 million small and mid-sized businesses. Alex Chris, of course, came from Intuit, focused on small and mid-sized business. There's been a lot of that focus at PayPal too. That's good too. Nothing crazy. This is interesting. 1 a.m. to 12 p.m. Pacific Standard Time, Black Friday was peak shopping hour. That's okay.
The problem with this is that I have no reference point. Like if I had a reference point to say up X% year over year, or here's how the trend looks like over the past 5 years, because this number in isolation means nothing to me. I don't know if it's big or small. Like, what does 15 million savings mean? I don't know.
Exactly. Yeah. So, like, Dan Schulman actually would get better reads on Black Friday and Cyber Monday than Alex Chris. It's maybe the one of two things that I miss about Dan. Nothing else. But no, I mean, he did some things well, just to be fair. But yeah, even when Alex was giving a lot more details that I think were important in 2023 and less in 2024, frankly, this update did not have the level of detail that I wanted or expected. But the problem with even the previous 2 years was you didn't really know, you weren't comparing apples to apples each year. And so you really didn't know how they were performing overall. And so that's the case with a lot of these. So this right here, powered double-digit growth in buy now, pay later transactions. Well, the context is, they offered a 50% cash back. It's a limited amount that they're actually giving away. It equates to basically half a day's free cash flow on average. Like it's not much. So PayPal can afford to do that. So of course, in that event, and also with 5% cash back as well through the end of the year on buy now, pay later. Beyond that, even when that phases out, you're going to see some ramp. Buy now, pay later is ramping anyway. If they did nothing with it, if they didn't advertise, no rewards, no incentives, you would still see probably double-digit growth as well. Klarna, they said 35%, I believe, year over year. We got a bit of a read from buy now, pay later products from others as well. So great, but double-digit, is that 10%? Is that 20%? That'd be good. Is it 30% or 40%? We don't know. Here's another one. This is really good. PayPal and Venmo debit transactions are up 60%. This is actually my second favorite number here.
Is that year over year or quarter over quarter or
year over year?
Since they launched?
So it's from the previous Cyber 5. So comparing Black Friday through Cyber Monday last year versus this year is what these are. So they have rolled out a ton of Venmo debit cards. They had some interesting partnerships with the Big 10 and Big 12 conferences. So a lot of Venmo stuff rolling out that way too. They've monetized the product. They've done incredibly well at the debit card side. They've launched, of course, PayPal cards internationally as well. Debit card for the younger generation, also Germany. Immense, insane demand there. So up 60% is not shocking. It's a little bit surprising. It's actually more than I would have guessed. But this again is not like I would like total payment volume or transaction amount or percent growth, but they didn't give us any of that. So my favorite number is coming up though. Pay with Venmo transactions increased double digits. Not my favorite number, but I mean, it's good. This, by the way, Pay with Venmo, prior to Alex Chris, Venmo and PayPal competed with each other, which is really stupid because it's owned by the same company. Really just a failed strategy overall. Now Venmo actually has an exact same rate as branded PayPal. So, a merchant doesn't have to say, well, maybe I shouldn't accept PayPal because Venmo is cheaper. Like that should have never been a factor. They've done a great job of getting more merchants to accept Venmo. There's been a lot more usage as well. And so this, in effect, is branded PayPal. They call it branded experiences. So it includes PayPal branded and Pay by Venmo as well as the main two drivers. And that's actually doing really well. That's actually more what the market should be looking at. So this is a nice increase because you really want to see that branded experience accelerate and be at 10% or above, which it's been right around there. Again, this is just a read from those 5 days, but it's a very good read. These days are very important. So this I really liked in particular. They've been doing a lot of work on app and specifically on the wallet side too. And a lot of what they do, they're building PayPal World. They also, what they're doing with Perplexity, for instance, and what they're doing as far as rewards and advertisements. a lot of that is centered or works around the PayPal app. So it's nice to see this healthy increase. If you're using the PayPal app, you're probably using branded PayPal. And so like that's just a really nice read. But I think there might have been one more. No, there's that. That was it. So that was it. So
That's
it's
exciting.
good, but how are we doing on the numbers that matter most? We don't know, and I don't like that. So it's better than not having any information, but honestly, it's a little bit disappointing update.
Yeah. Well, I mean, I think that encapsulates PayPal in a nutshell. It's better than nothing, but it's a little bit disappointing.
Yes. that is it right there.
So
today.
It's like that should be their slogan. Have you guys looked at Microsoft here? Steve just added. Well, I know Steve just added because it's been something he's been wanting to add for a while. Look, Microsoft is off its highs. It peaked at 550 and it's at 490. It bounced off its recent local low at 460. I think the business is going to do just fine. They have a solid growth trajectory ahead. This was just a healthy pullback for you to be adding on. And yeah, I mean, I don't own Microsoft. I wouldn't be opposed to owning Microsoft. I think it's a very well diversified business and it's going to do very well.
Yeah, I look at it in the same light as Amazon. Probably I would have Amazon just slightly higher and ahead of Microsoft in terms of investability. But yeah, it's a safe stock. They're going to be around a long time. But I'd rather just buy more Nvidia if I'm doing Mag 7.
Sure, that makes sense. Trump to make an announcement at 2:30 Eastern tomorrow. Roy, what do you think this is about?
I have no idea.
Market related?
Maybe, yeah.
We'll see, man, because I mean, recent announcements have been around the Fed chair, and we want to make the U.S. the crypto capital of the world and all of this other stuff. So
could be tariff related too. So some agreements, but
could be completely, Venezuela related. Who knows?
Yeah. Merry Christmas. Just wanted to say that. Peace out. Okay, cool.
Yeah, he could also just do like another announcement. We freaking invites Cristiano Ronaldo or does a World Cup announcement. Who knows? Who knows? Okay, I think we got through our questions that we had. Shall we wrap there?
Yeah, that sounds good.
All right. Here's what I want you guys to do. Steven Fiorillo here is streaming, and he is currently talking. Let me share my screen. He is currently talking about Jeppy and Verizon.
Oh, bro, Jeppy is fine, but Verizon. Why with the Dan Schulman stuff?
Yeah, I mean, well, he's bullish on Dan Schulman and Verizon. So, what I would like you guys to do is I would like you guys to go to Steve's stream, and you can let him know that Roy and Tevis sent you here. Shall we give people a little phrase to bomb Steve with? What do you think?
Yes. Say Dan. No, Schulman's probably too much. So just say Verizon. Roy hates Verizon. Yeah, there we go. Roy and Tevis hate Verizon.
Mustache. You can say Roy thinks Dan's the man.
No. Dan is good at pumping his own stock and everything.
Hey, up to 300.
By the way,
we're gonna do a raid, guys. We're gonna do a raid. There's 350 of you in here. Steve only has 236 watching. We just need to figure out what is the catchphrase. Roy and Tevis Milkman raid. Something short and sweet, D-Man says.
How about Verizon to 0?
Verizon to 0?
Yeah.
What do we think, guys? What do we think?
Roy says Verizon to 0.
Roy says Verizon to 0. Steve's going to call Roy the moment that Roy does this. So
he absolutely will. So I might see you guys over there. What
do we think? We think Verizon to zero? Is that everybody? Is everybody on board with this? All right.
Verizon to zero.
Okay. Guys, go on Steve's channel and everybody, I want to see everybody in the chat there say Verizon to zero. And we're all going to say it. Roy and I are going to go there right now. Thank you all so much for watching the best show on the internet. Screw Steve's Jeppy stream and Tanner's stupid mustache. This is the best show on the internet. The Bootleg Weekly, live every Tuesday at 6 p.m. Eastern. Thank you so much. And we will see you next week. Verizon to zero. Let's do it.